This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. I'm Carol Massar. Tim, as you know, is off this week. In the house is David Gura, who's like constantly working.
I'm here. Very glad to be here. Well, no rest for the weary, but I'm very glad to be here. I'm glad Tim's having some time off as well.
Me too. He needed a break because there's so much coming at us,
Yes.
you know? Like the market's just kind of bouncing around, continuing to, I feel like, take cues from what's going on with U.S., China. I mean, two biggest economies, whatever they do with the trade deal, that's got to matter.
Yeah, we've been paying attention to the, of course, end of the cessation of fighting and that shooting war in the Middle East, but this trade war deepening, and as you say, day after day, the undulations of the market really being driven by what's going on between the U.S. and China.
Well, you talk about everything that's going on and things we haven't talked about on our planning call. We talked about, remember the government shutdown now,
We're in the third week. Yeah, 15th day of that government shutdown. And I don't want to say nobody cares. Of course, a lot of people being affected by it, but the market certainly doesn't seem to care that much about it. Anyway,
we're going to get updates on all of that. We're also going to talk about Apple's latest pivot away from China. And then we've got a great read, David, on the industrial space. This is Prologis. They are big time when it comes to logistical warehouses, but they're also getting into, surprise, data centers.
There you go. I was going to guess. You did it for me. But CEO of that company joining us in a few minutes here
on
Business Week.
Lots going on, guys. Let's get to a check on the trading session. As we said, bouncing around here on this. It's a Fed Wednesday, and we've got the Beige Book crossing, so we're going to get to those headlines in just a moment. In fact, the Fed, we just got an initial one. U.S. economic activity, little change from the previous report. Charlie Pellet, take it away.
All right. Indeed, our Molly Smith's going to have a whole lot more on the Beige Book for you coming up in just a moment. Right to the equity markets here. Back in the green. It has been a choppy past hour. Last report told you the markets were lower. Right now, markets higher across the board. We have got the Dow, the S&P, NASDAQ, all in the green. S&P up 20 right now at 66.64. That is a gain there of 0.3%. The Dow up 0.1%, and NASDAQ up by 0.5%. Indeed, seeing a renewed wave of dip buying. Also, stocks advancing on the strength of those bank earnings this morning. The 10-year, 4.03%. The 2-year, 3.50%. Spot gold up 1.4%. Silver up 2.5%. West Texas Intermediate crude down 0.6%. We are seeing a sell-off in Bitcoin down 1.7%, 111,108 on Bitcoin. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you very much. David Gura here, in for Tim Stenivek with Carol Massar on Bloomberg Businessweek Daily. And as Carol mentioned just a moment ago, the Beige Book, the latest Beige Book coming out, I guess if we use the formal term, that's the summary of commentary on current economic conditions by Federal Reserve District. We're talking about each Federal Reserve Bank gathering anecdotal information on current economic conditions in each of those districts, reporting it up to the Fed, and giving us some flavor for how folks in those districts, we're talking about business owners, business leaders, are feeling about the economy at this moment and what they're seeing. This, of course, coming in advance of the next FOMC meeting at the end of this month.
I'm kind of excited.
October 28th, 29th. You're getting excited?
I always do.
Well, there's, a lot of strange factors to this one. We will get that CPI data. We can talk a little bit about that maybe as well with Michael McKee, Bloomberg TV and Radio's international economics and policy correspondent. He is in our Bloomberg News DC bureau, and here with us in New York, Bloomberg News economics editor Molly Smith. Mike, let me start with you. This is an impossible task to synthesize these many pages just a few minutes after it crossed the Bloomberg. But what are your takeaways? I think back on the last Beige Book that we got, and I think that the broad indication I remember is how there's flat to declining consumer spending because for many households they were worried about the path of the economy, worried about these tariffs and the effects they were going to have going forward. Picking up on the headline Carol just read a moment ago, sounds like we're seeing more of the same here with this iteration.
Yeah, pretty much. You asked how consumers and companies are feeling. I think the word would be meh. Economic activity slowed, and we saw hiring basically flat, according to the Beige Book. Nobody's really going out and adding employees. There is some sign, according to the Beige Book, that companies are increasing the pace of layoffs, and some are adopting more technology, they say. I guess a word for AI. Prices rising a little bit because of tariffs, and there are concerns about spending, which is slowing. Consumers starting to pull back, with the exception of autos, which the Beige Book says was driven by people trying to buy electric vehicles before the end of the tax credit at the end of September. So right now, it looks like the economy is still moving ahead. But there's you get kind of a different picture, and I'll be interested in Molly's view on this, from this Beige Book and what it's saying, and the Atlanta Fed's GDP Now number for the third quarter, which is about 3.8%.
Molly, come on in.
I think what stood out to me here is just this continued observation of this bifurcated economy between high and low income consumers. And that's what the Beige Book noted here, is that higher income spenders were still going out buying luxury travel and accommodation, that those kinds of categories were still strong, but that lower and middle income households still seeking discounts and promotions in the face of rising costs. So this is like just a very much like something that we've been seeing for, it feels like, I mean, this is pretty much, to me, what has defied every recession call that we've had for like the last 2 years. It's that high income households are increasingly making up the share of overall consumer spending. Right now, it's, I think, just right about 50%.
Yeah, it's a big deal. You know, it's funny because I was thinking about LVMH came out, I think, with their results, and their shares surged, suggesting that maybe that slump in luxury demand is easing, because we have seen it in the space. Having said that, Molly, we're in this kind of void a little bit when it comes to government data, right? We are expecting, though, the CPI print, I think, later this month.
Supposed to be today, right?
No, today. It was supposed to be.
But in the absence of that, I compiled for you all of the other private sector inflation pages out there. You're so welcome. There aren't that many, though, honestly, which is something that Powell had observed yesterday when he was speaking at the NABE conference, that unlike the job market, we have so many private sector alternatives there to see what's going on with labor demand, with hiring, with wage growth. Inflation, not so much. So there are a couple of companies that compile price growth throughout the U.S., but it really is biased toward the goods space. They don't do as good of a job looking at services inflation. There are a couple of companies that specialize in housing inflation in particular, but they don't really get the overall view. So if we're really looking at just what goods inflation seemed to do in September, you definitely did see some signs of tariff pass through in certain categories. But in general, a lot of these economists are saying that the expectation is still that inflation will eventually level off.
Like, I'm going to guess that these policymakers are going to take Molly's data and couple it with what we get from the Labor Department, the CPI data that's been delayed. Just help us understand the mechanics of that and how the Fed is kind of finding its way through this very strange moment with the shutdown extending into 3 weeks now. And I'm curious how much of a hindrance that is for them as they plot a path forward here, if any of that kind of resonated in what you heard from Chair Powell yesterday.
Well, I think there are 19 members of the Open Market Committee, and I think we had 19 downloads of Molly's story today about alternative data.
At least,
I hope more than that.
Ouch!
That's what they're using.
Julie, all of a sudden.
They're looking at alternative data to the extent that they can. And remember, they are also in constant contact with companies and with small businesses and consumers to an extent in their districts, the 12 regional bank presidents. So they're getting a picture of what people are saying is happening immediately rather than looking at the past data. And they're going to be making their decision based on what their estimate of what is, what is going to happen going forward, rather than what has already happened. They will have a pretty complete CPI report because the data was all gathered before the government went out. But the concern is whether they will have any October data, because we're getting deep into the month and they'll be able to collect less and less of it as the month goes on. So they really have to start relying on forecasts for what they think is going to happen. And in that case, what you get is different districts see different developments in markets, and this has just been a story throughout the Federal Reserve's time in being, because the country is one big country, but there are a lot of different changes. We were talking about prices from tariffs coming through, but we're also seeing reports in the Beige Book here about how in the agriculture industry and low-scale manufacturing, they're having trouble finding workers. And that was a big theme at the NABE conference yesterday, is that there's going to be a big worker shortage next year in these lower-paid manual labor industries. And and that could drive up prices as well. So a lot of cross currents out there for which there isn't great data right now.
And Molly, kind of complementing that as I look at the summary in the Beige Book that was just released, labor supply in the hospitality, agriculture, construction, and manufacturing sectors was reportedly strained in several districts due to recent changes to immigration policies. This is the other kind of big story looming here, the effect that this administration's crackdown on immigration is going to have on the economy. So there you have the anecdotal evidence borne out. What are we seeing in the data when it comes to the effects that policy is having on the labor market in the U.S.?
I think this is such a big debate right now as to what kind of shape the labor market is in, because in the one hand, you're looking at weaker hiring numbers, that you're thinking that the job market has significantly slowed. And it's true, the pace of hiring has come down substantially. But labor supply has come down substantially as well. So do you need as strong of job growth if the working population is that much smaller? I think that's really the key debate right now. And there was a blog post from a Dallas Fed economist recently that argued, no, you don't need that strong job growth because the labor force is that much smaller. So it's really still key to make that distinction of, is the labor market really weakening or is it rebalancing?
It's just a reminder of kind of all of the tensions that are coming out at us that maybe are changing the read on statistics. Mike, I want to bring you in because on that note, still coming at investors, still coming at economists, still coming at business leaders, the trade tensions between U.S. and China. So we've got kind of that going on and trying to figure out the impact on that still yet to be determined. At the same time, we got a read on the big banks this week, which is another read on the U.S. economy and how things are going. How do you fold all of that in?
Well, if you're at the Fed, you hive off what's happening with the banks and earnings in Wall Street because it's a kind of a different world. And to a certain extent, it can represent what's going on in the economy if you're talking about things like mortgages and car loans, of which they are not making a whole lot. The merger and acquisition business is doing very well, and the stock trading and bond trading and currency trading businesses are doing very well, we learned this week. But that's not the real economy, and that's not what's happening to the people on the ground across America. And so they're not really looking at those things. They are looking at whether or not people's wages are going up and whether they're keeping pace with inflation and what we think the inflation rate is, and also what consumer sentiment is, whether people think they want to buy something now or whether they're pulling back because they're concerned about the overall economy. One point I want to make about what Molly was just talking about in terms of do you need workers, the conference I was just at, the Business Economist Conference, they were making the point that even though we automate more stuff or we may not need as many workers, certain industries, particularly agriculture and construction, need a lot of trained workers, or less trained for agriculture than for construction. And many of those were filled by immigrants. And the euphemistically worded change in immigration policies, as the Beige Book put it, is causing a real problem. There was one survey one company put out at this meeting that said there's going to be 500,000 short construction workers next year.
Yeah.
And that's going to really slow down the housing industry, which, of course, is a big contributor to the economy.
As long as there's demand to build.
Well, I would say, I mean, look,
let's just do the whiteboard here, kids.
Of all times to pull back on construction workers, this would be, I would say, a pretty good time to do it because builders are slowing the pace of construction anyway. Yeah. There's so many new homes available on the market that have been sitting unsold because they had been ramped up when mortgage rates were a lot lower. And now mortgage rates are where they are. People are not buying these homes, so builders accordingly are pulling back on construction. So, of course, this is, a real strain for these companies, but in the grand scheme of where they're sitting right now, not so bad in terms of a time where you're kind of slowing the pace anyway.
All right. Good stuff, guys. A lot going on when it comes to the U.S. economy and trying to really figure out what is the way forward. Bloomberg TV and radio international economics and policy correspondent Michael McKee, along with Bloomberg News economics editor Molly Smith. Hey, just a programming note. Fed Governor Chris Waller speaking with Bloomberg's Tom Keene. That's tomorrow, October 16th, at the Council on Foreign Relations. Bloomberg Radio and TV will be airing that conversation as well. So looking forward. Well, anything Tom does is entertainment.
I'm going to be there in person.
You are?
I am, yes. I couldn't resist that.
You're going to be like heckling Tom from the...
With moderation. I'll get the free breakfast at least.
Sounds good. And it should be a good conversation. So be sure to check that out. Hey, we're going to continue on kind of this macro environment and the issues that are impacting certainly the U.S. economy, the global economy, and also U.S. trading. U.S. Treasury Secretary Scott Bessent addressing one really important issue. We just brought it up with Mike and Molly, and that is U.S.-China trade negotiations. He addressed it earlier. He proposed a longer pause on high U.S. tariffs on Chinese goods in return for Beijing putting off its plan to tighten limits on critical rare earths. Secretary Bessent spoke alongside U.S. Trade Rep Jameson Greer.
This is China versus the world. They have put these unacceptable export controls on the entire world. China is a command and control economy, and we and our allies will neither be commanded nor controlled. They are a state economy, and we are not going to let a group of bureaucrats in Beijing try to manage the global supply chains. We do not want to decouple. We should work together to de-risk and diversify our supply chains away from China as quickly as possible.
That was Treasury Secretary Scott Bessent at a joint news conference earlier today at the Treasury Department in Washington, D.C. And Carol, I think what's so fascinating about this is the time and place at which this is taking place. We've talked a bit about the government shutdown, but right now in Washington, you've got these major meetings of the IMF and the World Bank and the IIF. So a lot of prominent financial ministers and bankers are in town. And it sounded to me, Carol, as the Treasury Secretary spoke, there's going to be an effort on his part and the trade representative's part to kind of bring over some of those officials from other countries to kind of convince them that they should be taking a stronger tack against China in light of what the secretary was saying.
Yeah, I mean, we hear so much about the relationships that China has with Russia and elsewhere in this world, and the importance of making sure that kind of China is kept in check to some extent. But I mean, listen, we are in races here, whether it's technology, whether it's AI, and China is certainly thinking about its domestic economy. It's been trying to build it out, right, David, for so long, but still is so reliant on what it sells to other countries and what it sells in terms of exports. So interesting. I would say two biggest economies still need each other, still got to work together. And so I feel like, you know, what is this, third, fourth round of negotiations in terms of major teams from both countries? And you got to assume that something's going to be worked out that both sides benefit to some extent.
As we see the markets vacillating up today, we have the S&P up about 1/3%. We've noticed how much has kind of tracked the movement on this particular issue, on this trade war. And I just, you know, it's funny, we've become so inured to kind of the back and forth between the U.S. and China, the U.S. and other countries as well. But there was something inherently spooky, I think, about what happened on Friday when you had China announcing those export controls and Jameson Greer, the trade representative, coming out saying the scope and the scale of what was proposed by China, just unimaginable. That was his word, and it cannot be implemented. So I think that while it scared markets clearly, and it's kind of highlighted such a big issue for them, clearly something that's a driving issue here for policymakers in the Trump administration as well. It's a non-starter for them to have to live with this.
It was interesting listening to Bessent too, and just talking about kind of the negotiations back and forth, and talked about that all of the meetings that they had up to this point largely have been friendly, cooperative, and then they talked about one specific official from China.
Kind of a mid-level, not the top official, mid-level official on the Chinese side.
Who did not seem to play nicely and very critical in terms of methods. And I just thought that was kind of interesting. I'm not sure I've ever heard that. Yeah. Someone singled out.
Called out in that way.
Right. And whether or not really speaking for China more broadly and for the Chinese president. Hey, let's see what Dan Flatley has to say. He was listening to everything that Secretary Bessent had to say. He is a U.S. Treasury reporter for us here at Bloomberg News. He's there in our D.C. bureau. Dan, always a lot. I feel like I have to take a breath, do a moment. Secretary Bessent, though, talked a lot about the U.S.-China relationship. What's the reality of where we are here? Is this just kind of show and the back and forth we should expect it? Are we making progress? Get us up to speed here.
Yeah, you know, it's a great question, Carol. And I just, heard you mention this very provocative, I think, move by Secretary Bessent to mention one of the Chinese trade negotiators, Li Chenggang, who was at the London talks, was at the Madrid talks, has been at the other talks. And Bessent and Greer typically make a big show of, how well they're getting along with their Chinese counterparts. And for Bessent to single out Li in that way was very interesting. And I think, one of the theories behind that some folks have talked about is that They want to basically give the leaders, Donald Trump and Xi Jinping, some space to maneuver here. So, I was talking to somebody last night who kind of used this metaphor of the bureaucracies kind of running into each other. So the Chinese bureaucracy, the U.S. bureaucracy, all of these sort of this inertia around a lot of these measures that have been taken up to this point in time, sort of continuing even as the leaders try to come to some sort of an agreement. And so what we have here is a very odd situation where both sides are trying to gain leverage, and neither one is quite sure whether the other side is serious or whether this is just a play for more leverage heading into these talks in South Korea, or what's going on here. So it's a very odd situation, but the latest that we know, of course, is that Bessent came out this morning with some pretty strong remarks.
And you mentioned kind of the bureaucracies butting into one another, and then there's the prospect of the two leaders meeting in South Korea at this APEC summit in a few weeks' time. And it seemed as the weekend got underway, that wasn't going to happen. The President of the United States saying he saw no clear reason why they should get together, given that announcement about those export restrictions. What I'm curious about is how inchoate this policy is. So what's at stake now are these new tariffs on wood and furniture. Of course, there are these new levies that are going to be put in place on Chinese ships and U.S. ports. We saw retaliation for that as well. Carol starting off noting the exhaustion we all have. I mean, I think I was listening to the secretary. I thought like a good question for Scott Bessent would be, could you list all of the stacked tariffs that are in place on China right now, because there seem to be so many of them. What's your sense of sort of what's in place, what additionally could be put in place, sort of where we are in this process? Yes, it's kind of teasing out the restrictions they want to put in place to see what moves could be made in response, but where are we in that process of just what the U.S. can bring to bear on China?
Yeah, it's a great question. And I think that, one of the things that was really sort of revealing is something that Bessent said at the end of his remarks, almost as an afterthought, just as he was about to head off stage. He said, could we have a longer extension, meaning longer than 90 days, which has been sort of the rolling extension that we've seen since the original detente in May. Could we have a longer extension in exchange for a delay in these rare earth restrictions? Perhaps, he said, perhaps. And so there's a lot hanging on that word, perhaps. But I do think that was a little bit of an olive branch that he is offering to the Chinese to say, look, we can deal with some of these issues that you mentioned, David. The lumber tariffs, the tariffs on furniture, all of these sort of measures that both sides have taken in differing degrees. We can push that off. We can have continue the truce. We can get the leaders to meet, and we can continue working on these issues. But we need to sort of take down the temperature a bit. Now, he's saying that, he's putting that out there, and it's sort of now in the Chinese camp to respond to that. And we don't know necessarily how they're going to respond, because they may view some of the moves, as you said, David, that the U.S. has taken as a provocation, not as a peace offering. So there's a lot going on there for sure.
Talk about a bargaining chip, the rare earth materials. Dan, and I'm just curious if that wasn't part of the discussion, because I'm trying to remember, U.S.-China trade, it's a lot of stuff, right? And even though we have kind of a goods deficit with the world, we often talk about all the services that the U.S. exports to the world, and I'm not quite sure exactly where we are with China on that. But I mean, if we weren't talking about rare materials or rare earth materials, would we be closer to an agreement? Would it be easier? Would it be easier for the U.S. to slap higher tariffs? Just trying to figure out how important that is in the context of everything. We know how important it is in terms of chips in the auto sector. We know right now that the U.S. has really no position in it. It's China in terms of all the processing. But I'm just wondering, is it all largely about that and how vulnerable the U.S. is right now?
Yeah, no, I mean, it's a great question, Carol, and I think you're right. I mean, the rare earths element is key here. That is really the whole ballgame at the moment, because those are elements and those are components, and they are products that are used in everything from iPhones to MRI machines to all sorts of consumer electronics. And without those elements, and let's remember that China still controls the production of many of those products and has much of the world's deposits of rare earths. months. So China, that's a real leverage point for them. But let's not forget soybeans. Let's not forget agricultural products. Let's not forget some of the other points of leverage that are out there. So if it weren't this thing, it could be other things as well. And one last thought that I had was that I remember looking back at some earlier stories from earlier this year where China was sort of saying, we want to talk to the U.S. We want to have somebody that we can deal with, a point person, somebody that we can respect. And Scott Bessent emerged as that person. So it really is kind of incumbent upon him to keep this relationship going because he is the point person at this point. And so we'll see, how things shake out over the next few days and the coming weeks.
Dan Flatley, like the point person on a lot of stuff right now. Right?
Yes, no, I think you're right. I think you're right. Yeah. And is he still overseeing the IRS? I'm not sure if that's still.
Yeah.
Yes.
Yeah. Sorry. He's still the commissioner, although there is now a CEO of the IRS, which is sort of another thing that we can get into another time. But yeah, he's definitely got his fingers in a lot of the stuff going on in D.C. now.
We will return to that at another time. Dan Flatley, thank you very much. Dan Flatley covers the Treasury Department, really spelling out for us kind of the moment that we're in right now, the calendar that we're on, looking ahead to that November 1st deadline, which, as Dan said, Carol, could be extended. And then that meeting in South Korea, which Secretary Bessent did say in those remarks today, as far as he knows, is still on the agenda. President Trump's still slated to meet with President Xi, so that will be sure to be a pivotal moment if and when that does take place.
Listen, we've always talked about getting any kind of deal done between the U.S. and China. It's going to be a long process, right? It's a big trade agreement, and so this isn't something easy. I'm waiting for President Trump to come out and say, got a deal done.
Right.
Because it tends to be his way to say, we got there.
And then different animal.
And then go back. Yeah, exactly. Hey, listen, we're going to talk a little bit about earnings right now. I am also curious to see what our next guest has to say about some of these big macro issues that are coming at us. Dan Leder is president and incoming CEO of Prologis. He takes over as CEO in January. He joins us from our San Francisco studio. And we should point out that the company shares are rallying. They're up after they reported better than expected quarterly earnings. They boosted their forecasts. They talked about data center opportunities, which is always something that catches investors' attention. Stock, by the way, is up 15% year to date. Dan, great to have you here with David and myself. I do want to talk earnings, but we got to ask about the macro backdrop, whether it's trade talks between U.S. and China, government shutdown, rare earth materials, minerals. What do you really watch when it comes to some of these big macro issues?
Well, thanks for having me. It's great to be here. Coming off this earnings call, this was certainly a topic for us. We had a tremendous quarter. As a matter of fact, we broke a record this quarter for leasing. We leased 62 million square feet of space throughout our 1.3 billion square foot portfolio. And you think about that in context, 62 million square feet is the equivalent of leasing Central Park in Manhattan twice over again in one quarter. So our team, working tirelessly around the world, leased 1 million square feet a business day during the third quarter. And certainly these macro business trends are telling by our customers who are the front line of the economy.
You look at the softer data, and there is still some anxiety among a lot of business leaders about where things are headed. Maybe that's restricting them from making some of the CapEx expenditures that they would have otherwise. You're detailing for us very strong numbers, and I wonder what that says to you just about the capacity of these business leaders to look through or past the uncertainty surrounding policy, including trade policy. Just give us a sense of the moment that we're in right now as you understand it from talking to your customers about how they're feeling about the business climate going forward.
Sure, it's a great question. One of the things we're most proud of at Prologis is our customer franchise. We have unique proprietary data and we have unique relationships, just given the size and scale of these relationships. And after what has really been 2 to 3 years of uncertainty, going back to rate hikes 2.5 years ago, we see our customers actually getting off their back foot. What we've seen over this last quarter is actually customers moving from caution to optimism.
Wow. Why? Because things are getting settled in terms of trade, tariff? Like, what is it that has calmed some of your customers?
I think our customers realized after a couple sluggish years of not making many decisions that they have to make long-term decisions. And that's what they do when they do business with Prologis. And they have to look through the short-term noise in order to ensure that they're positioned for growth going forward.
So you're talking about Amazon, Home Depot, FedEx, UPS, GigaCloud Technology. I mean, these are some of your big customers. So you're talking about these guys are feeling more sure about the outlook than maybe they did over the last couple of years.
Yeah, precisely. As a matter of fact, coming out of a cycle, we're really in just a classic real estate cycle right now. And what you're seeing typically at this point in the cycle is it's the big, well-capitalized customers that lead the way out of this part of the cycle.
This is a basic question, you'll forgive me for, but when we talk about warehouses, what are we talking about? Are these just simply places to store stuff, or are they places where there's a lot of movement, a lot of products coming in and out? When we talk about sort of the bread and butter of your business, what are you building, what are you leasing out?
Yeah, thanks for that question. We own nearly 6,000 buildings. These buildings are located in 20 countries in markets that represent about 78% of the world GDP. As a matter of fact, in 2024, we had the equivalent of nearly 3% of the world GDP go through these buildings. Our focus in building this portfolio, curating this portfolio over the last 42 years is having the highest quality, best located logistics real estate close to consumers.
So where are you geographically building out the most? And, you know, where are you looking to kind of increase your square footage or buy properties or buy land?
Well, the way we've set this organization up is our teams are calibrated to look for good deals around the world. And we're heavily focused, certainly this year, on build-to-suits with our customers. We're on track for maybe our highest build-to-suit volume ever. And what does that mean? That means we have a contract in place with these customers before we start building for them. And we're seeing that broad-based across most of the sectors as well as geographies spread throughout the world.
I bet you can't do an interview without being asked about AI, so forgive me. We're going to do it. And I want to ask about it in two ways. The first is sort of how it's changing the way that you conduct your business. And then the second question is picking up on what Carol said, you looking at the demand for data centers, maybe changing your business tack as well. Where do you see opportunity as this revolution, as it's called, continues and there's the need for more space for processing all of this data?
Yeah, AI is here, and it's big, and it's big at Prologis. Certainly, we have all sorts of different operational and tools that we're building to make our teams more efficient and to be able to help them move faster. But when you think of AI in Prologis, we announced today we now have 5.2 gigawatts of power, either secured or in the advanced stages of being secured in sites, mostly tier 1, tier 2 sites in the United States, and then the tier 1 markets called Flatley or the double M in Europe. So Prologis is now, we've long been in the higher and better use business, but again, given that footprint we have close to these consumers, well, the next wave in the modern economy is the digital economy, and AI and data centers are the logistics of that digital economy. We're talking with Dan Leder. He's president of Prologis. He is incoming CEO, excuse me, takes over that spot come January. Wait, Dan, so give me an idea, just to explain your business. How much is logistical warehousing right now? How much is data center? And where do you see the most growth going forward, especially on a day where Meta, Microsoft, BlackRock, there's more, all doing data center, deals, and it feels like a lot's happening in Texas, to point that out as well. So give us an idea of your mix today and where the growth is happening. Well, I look at our growth in our base portfolio. We own or control 14,000 acres of land close to these consumption centers that I mentioned. We can build out another 240 million square feet out of that land bank. That's a tremendous amount of space. And when it comes to data centers, this power that we've secured, we've long been in the higher and better use business. Think about the fact that logistics and warehouses is typically the cheapest house on the block. We've always been in the business of optimizing that real estate value for our investors, and data centers are certainly a trend right now that we're able to capitalize on given the footprint and the raw material that we own and control.
Just want to note a headline here across the Bloomberg terminal that a judge has blocked federal firings during the government shutdown for now. We were talking about that a few moments ago as we were talking about the Beige Book from the Federal Reserve, Dan, and what that was telling us about the state of this economy. And one thing therein is how difficult it is to find workers, particularly workers to do construction. And I think a theme to the AI story is amid all of this demand, it's hard to get folks to build the data centers that we need to buffet all of it. And I wonder if your company is dealing with that as well, just the difficulty of kind of keeping pace with how fast all of this is moving.
Yeah, thanks for that question. I think about that as we look at what is the replacement cost rent to build the next marginal building, whether it's logistics or data centers. And we look at that right now, and the cost, the rent to build that next building is actually 25% higher than market rents today. And then I look at that relative to our in-place rents today, it's actually nearly 45%. And one of the key issues is the cost to build are getting that much more expensive, and labor is certainly a factor there.
Interesting. Hey, one thing just to follow on, going back to data center and your build out, you talked about also the acquisition of 5.2 gigawatts of power. It's a lot. How much, though, is in terms of the build out for data centers? You've got to track it with having access to power. And does that slow some of the build out? Just got about 30 seconds.
You know, this 5.2 gigawatts that we're quoting is just a portion of the universe of opportunities we actually have given our size and scale. With our 6,000 buildings, there's 14,000 acres of land. We already own this land and these buildings at logistics bases. And so we brought in-house expertise. We have a very large energy business. We've got 1 gigawatt of power that we'll be generating off our rooftops by the end of 2025. So we've been building that energy capability that gives us just a better relationship with the power companies.
Yeah.
And so we're in great shape there.
Listen, a great interview, and I want to keep going. I wish we could. Dan, come back soon. Dan Leder, incoming president of Prologis, joining us here on Bloomberg.
And again, that headline, judge blocking federal firings during the government shutdown. For now, we're on the 15th day of that shutdown. We'll have more coverage of that ruling coming up here on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all higher. Stocks are getting a lift from bank earnings amid trade worries. S&P up 27 now at 66.71. That is a gain of 0.4%. The Dow up 21, up by about 0.1%. NASDAQ up 145, showing a gain there of 0.6%. We are experiencing a day in which stocks did move lower across the board, but right now gains for the Dow, the S&P, and NASDAQ. 10-year 4.04% with a 2-year 3.50%. Gold is up $56 the ounce, up 1.4%. West Texas Intermediate crude oil down 0.5%, 58.39 a barrel, and Bitcoin down 1.5%, 111,320 on Bitcoin. Papa John's International shares surging on a Reuters report that Apollo Global Management has submitted a bid within the last week to take the pizza chain operator private at $64 a share. PZZA on the ticker, and right now the stock is up by 8.3%. And TrueCar has agreed to be taken private in an all-cash deal valued at about $227 million. TrueCar is surging 61%. Meta Platforms has removed a Facebook group that's used to share information about immigration and customs enforcement agents in Chicago after a request from the Justice Department. Meta Platforms up 1.3%. And a judge, as we told you moments ago, a judge has blocked federal firings during the government shutdown for now. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Carol Massar along with David Gura. We are live here at Bloomberg headquarters. David, of course, in for Tim on this Wednesday. Hey, and another Bloomberg exclusive, because it feels like it's one after another from our own Mark Gurman.
It's superfluous to say, maybe.
Exactly. Reporting out that Apple is preparing to expand its manufacturing operations in Vietnam as part of a push into the smart home market and an ongoing effort to really lessen its dependence on China. So let's get to it. Mark is managing editor for Global Consumer Tech. He's out there on the West Coast. Well done, well done. What's going on here?
Yeah, thank you so much for having me. So to your point, Apple is preparing to expand manufacturing operations in Vietnam. They are developing a series of new smart home devices for next year and for 2027. One is a smart home hub. We've talked about it a million times, I think, to compete with the Amazon Echo. The other is a tabletop robot, which would compete with some devices that are now becoming quite popular in China. And they're also working on a smart home privacy-centric security camera that would compete with Ring and Nest and all those other companies that make security equipment. These are going to be built first and foremost in Vietnam. They're working with a company called BYD. They're otherwise known as a China electric vehicle manufacturer. They're actually quite popular in Asia. They also do some mass manufacturing for Apple, though, out of Vietnam, and they'll be handling these devices. They already make some iPads for Apple, but this is going to be a significant expansion of the BYD business for Apple, but more importantly for Apple, an expansion in Vietnam. As you know, whenever they come out in major new product categories, they usually kick things off in China. So this is a bit of a shift.
Mark, I'm curious sort of what the Apple supply chain looks like geographically. So you've mentioned the importance of China. Obviously, Vietnam, incredibly important now in light of what you've been reporting. But I know that they make things in India. They make stuff in Malaysia, Thailand as well. So how do they think through the way that their supply chain looks now and how it should look in light of the kind of trade uncertainty that we've seen them having to grapple with, like so many companies?
Here are the broad strokes. China production is for China and everywhere but the United States. The United States production is elsewhere. Obviously, this is because of the tariff situation and the global politics and what have you. So India has become the iPhone base for the U.S. Vietnam, it's the Apple Watch, it's the home devices, it is the AirPods. And then for Macs, you're seeing a lot of production happening in Thailand. You're seeing some production happening in Malaysia and some in Vietnam as well. It's expected to occur there. And then Indonesia, very small player. They're making some mesh fabric for Apple products, including the AirPods Max headphones. So the supply chain has gone under a rapid expansion across Southeast Asia over the past couple of years.
Hey, one thing I want to ask you, Mark, because it sometimes feels like some mixed signals. Like we've got BYD, it's a Chinese company, so Apple is working with them on these products, and yet at the same time moving manufacturing to Vietnam. So is that Apple kind of giving China something, yet doing something else? Like, I always think they manage that relationship very carefully.
I mean, to be fair, Foxconn is a Taiwanese company, and they're based in China, and all of their manufacturing is primarily done in China. They've expanded to India and Vietnam and what have you. So in terms of where the company, originated and where it's based versus where they do manufacturing, that's not as relevant. What's more relevant is that Apple has to sell the idea to the Chinese government that they're not backing down from China, even if they're diversifying outside of China. And the way they do it is continue to build for China and everywhere outside of the U.S. in China. And that's not to say they're not doing anything for the U.S. in China. My new iPhone 17 Pro Max, obviously I live in the United States, it was built in China. So they're still doing some, but that's really for the first wave of the new devices. Over the next few months or so, you'll see a lot of that 17 production for the U.S. shift back to India.
As you said, though, the onus on Tim Cook and Apple to say to Beijing, listen, China, we're not backing down. But are they backing down? Mark, as you look at it, it kind of feels like they're backing down a little bit.
I think there's a bit of a yo-yo effect here. I don't think anything is set in stone. Apple is moving as the wind blows. And right now the wind is blowing in the sense that they need to get manufacturing for the U.S. because of tariffs outside of China. There will be another administration at some point. There will be tariff changes during this administration. And so they're going to shift as necessary. They've built the supply chain to be fairly agile, where they can move layers of production in between countries. They have all the facilities there, and they can crank up that percentage of what needs to be done in Vietnam, crank down the percentage of what needs to be done in China, and just go as the wind blows. As you know, really 2026 is going to be the year of the tariff impact, because so far it's been negligible for Apple. The hit has been just like a few $1 billion, which is essentially nothing compared to the amount of revenue they bring in. They are getting some reprieves from Trump. Obviously, they did the dog and pony show around the glass shift. from China to the U.S., but certainly there's going to be more movement to come as well. And so they'll shift as necessary. And I think the word of the day should be agile, because they're moving as they need to.
Mark, let me ask you lastly here, 2026, the year of the tariffs, the year of all of these devices as well, underpinned by this new Secy, and we've seen some delays on that and some difficulty getting that ready for prime time. In your piece, you kind of lay out what the ideal timeline is for Apple going forward here. I wonder, as you think about this and as you talk to your sources, is there a sense that they're going to be able to stick to it, or are those delays going to be kind of prologue for what's to come here in 2026?
No, I think this is it. I mean, these new home devices, particularly the first one, the Home Hub that I mentioned, that was supposed to come out last March or March earlier this year. Now it's going to come out in April of 2026. I would say it's going to be disastrous if they miss that March target. I don't anticipate them missing it. I think they're getting it out the door one way or another.
All right, we got to run. Hey, Mark, thank you so much. Mark Gurman, of course, managing editor for Global Consumer Technology out there on the West Coast. All right, you are listening and watching Bloomberg Businessweek Daily. Carol Massar, David Gura. Just want to rehash a headline that crossed just moments ago. A U.S. judge has ordered the Trump administration to pause plans to fire thousands of federal workers during the government shutdown while labor unions challenge the move. And this is a big part, David.
A huge part. And as we've said, this is the third week of this government shutdown. There's no clear off-ramp to it. A lot of folks are speculating this could last until November. So this is something of immediate importance, of course, to a lot of those workers who've been furloughed and laid off. And I should note, the President of the United States is signing some directives right now. He signed a federal hiring freeze, which isn't to be unexpected, I think, during a government shutdown. And we're waiting for him to hold a press conference in the Oval Office with Kash Patel, the director of the Federal Bureau of Investigation. And we'll see, of course, monitor what both of them have to say. But certainly that would be a moment during which he could expound a little bit more, both on sort of his sense of how this shutdown is going, if he thinks that it's something that's advantageous to him and his Republican Party, if there's been any progress between the Republicans and Democrats. So far, all the reporting that we've seen indicates that both sides here, Carol, not talking to one another, again, 15 days in.
Yeah, no communication, it feels like, at this point. We should point out layoff notices did go out to more than 4,100 federal employees, but the order isn't a final decision on the merits of the case. So to be continued, as many things are. Hey, folks, you are listening and watching Bloomberg Businessweek Daily. Carol Massar, David Gura, and when we come back, we're going to take a look at some stocks on the move. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
Good afternoon, everybody. David Gura here in for Tim Stenovec with Carol Massar. We get a lot of news, a lot of headlines out of Washington on this Wednesday afternoon. A federal judge just ordering the Trump administration to pause plans to fire thousands of federal workers during the government shutdown, a shutdown that is now in its 15th day, Carol, really stretching on here. And a lot of folks there in Washington, in the federal government more broadly, I should say, outside of Washington too, really dealing with a lot of uncertainty, who are furloughed, who have been laid off. This now going before the courts, this pause in place. And we're going to talk about it more with Laura Davison, who's our Washington Deputy Bureau Chief. She joins us now. Laura, I mentioned that uncertainty. I can't put too fine a point on that. Where do things stand now that we have this judge's ruling, not a final decision on the merits of the case? What does it mean for those workers who are very worried about their position here in the government going forward?
So it means that federal agencies right now have to stop and halt all the plans for the firings that took place last week. So that means that those people will be able to keep their jobs for now, and that any future rounds of firings, as the White House suggested yesterday is coming, will also be halted. This is just a temporary block. As you mentioned, they are just paused, and there will be a decision to come later on the merits of the case about whether these can proceed. It was quite a dramatic moment this afternoon, because just before this ruling came out, Russell Vought, speaking on a Charlie Kirk podcast, said that he expects that layoffs would exceed 10,000 people. Right now, we've seen about 4,000 or so that have received layoff notices. So this is very much a clash of where the White House sees things going as where the judge came in and said, hey, look, you got to hold your horses here.
Laura, what's the status of conversations among lawmakers on Capitol Hill, among lawmakers and the White House, the Trump administration, just about sort of where we are in this shutdown and where it's going from here? I know there's a lot of concern about back pay. So the president was able to arrange for members of the military to be paid this week by moving some money around. The uncertainty begins to kind of compound and amass as time goes on here. What's the status of those negotiations, so much as there are negotiations here between Republicans and Democrats?
Yes, there are no negotiations happening. The House is still out. They've been out for the full 3 weeks of this shutdown. We're now on day 15. The Senate is in session, but they've continued to vote on the same bill, and they have had no progress. And there's been no really behind-the-scenes discussions happening. You've had small groups of moderate members trying to talk together, but those haven't really yielded anything. But the thing about a shutdown is that the first couple days, there's not much pain. But as the shutdown goes on, the pain compounds. You see, today, this week, and last week, we've had, millions of federal workers who have missed paychecks. Military members are getting paid at least this first paycheck this August 15th, or rather October 15th paycheck. They'll be paid, but it's unclear if later in the month, if the shutdown persists, if they will. We've already started to see some delays with air travel. Those could mount as the months go on here. So this is very much unknown about how this ends, but we do know that as the shutdown continues, things get more and more painful and unsustainable from a political standpoint.
Not good for any workers, though, that might be furloughed and not getting paid. But I want to ask you something about this because it made me kind of scratch my head. Laura, my understanding is that this isn't the final decision on the merits of the case, but also it has to do with union workers. How many of government workers are union workers? I didn't realize that there was a distinction.
Yeah, there's a high percentage of federal workers who are unionized. I don't know the exact figure, but there's a patchwork of unions that represent various agencies, and they've been very involved, in the process here. We really saw them start to mobilize earlier this year in regards to the Doge firings, as that happened very swiftly. This is one of the things that they've kind of realized is they need to get out in front of these cases a lot, because once workers leave the building, they have their badge taken away, they have their email taken away. It's really hard to bring some of those people back, even if they are later. If the firings are later ruled illegal. So you see sort of a change in strategy here of, wanting to make sure that those workers don't leave their posts, get out the door while the merits are being decided.
Laura, very quickly here, on the White House schedule, there is a press conference coming up with President Trump and Kash Patel, the director of the FBI. I'm curious if you have any sense of sort of what the two of them are going to be discussing with reporters. And obviously, I imagine we might hear some more here just about the state of the shutdown from them when they field those questions in a few minutes.
Yes, as always, Trump will take a question that's on a variety of different topics, even if the topic is focused on the FBI and the Department of Justice. So we'll see exactly how that shapes up. But, Trump is almost certainly going to react to this shutdown ruling on the firings, as well as, there's been sort of a flurry of news both around the shutdown as well as global issues, China also being top of mind.
All right. So we're not quite sure what they're going to really talk about, though. We know there's going to be a lot asked, but we're not quite sure what the reason is, right?
Exactly. They have not yet specified that, which is not atypical.
Yeah. Okay. Surprise. Okay. No. We're ready. And as you said, if there's reporters in the room, they're going to take questions on a lot of stuff that is certainly coming out of Washington. Laura, always appreciate it. Laura Davison, of course, joining us from our D.C. bureau. She's Bloomberg News Washington Deputy Bureau Chief. It is amazing, right, that we often get these this is what's going to happen. And sometimes we know there's an executive order, and sometimes we're not quite so sure. We know that there's been things coming out of Justice and the FBI, but you wonder where it's going to go.
Yeah, you think of how it was in the past, have background briefings, a good sense of what the president's going to talk about. But as Laura was saying just a moment ago, this could go any which way, and we'll see what happens. And as you said, Carol, we'll be watching for headlines here on the terminal and bring you those as soon as we get them. And obviously, if the president is talking about the shutdown, something important, bring you those comments live as well. But we, like all of you, waiting in real time to figure out what the president's going to have to say.
Welcome to our world. Hey, listen, S&P 500, folks, up about 0.5 percentage point, Dow up about 0.1%, NASDAQ 100, a gain of 0.8%, and you've got kind of an even split in the S&P in terms of gainers and decliners. Do not go anywhere. If you're watching on TV, the close coming your way. Dave and I continuing right here on Bloomberg Businessweek Daily.